Back to the charts with Big Boss Crypto, bringing on a day trading analysis on Bitcoin and on AVAX. This is day trading Big Boss brother number 2, and today we're going to take a look at what needs to happen for Bitcoin, and if we break this line right here at 25.8k, something will happen that will trap a lot of traders going long. And also we're going to take a look at the recession statement from Germany and what kind of effect that will have on the economy in general and on Bitcoin. Let's look at the charts. So I'm back again with a day trading analysis for you guys. I've been off for a couple of days because I just had my first child, and we are gonna go through what has happened since my last video. And the first thing that pops up is that Germany declared a recession 2 days ago, and that will have a big effect on the European market and on the euro, because Germany is the biggest economy in Europe and one of the largest ones in the world as well. So if this affects the euro and the euro goes down, that means that the dollar will go up in value, because the largest portion of the DXY, the dollar index, is coming from the euro strength. And if euro drops, that means that dollar will go up. And as you know, most of the oil out there in the world is traded in dollars. So if the dollar is stronger, that means that the oil will get more expensive, and if it gets more expensive, that will cascade in a even bigger recession, because oil is needed for transport goods in these ships, for example, where much of the goods is being traded and transported. So if oil is expensive, that means that will affect on the trade as well. And if we take a look at the Bitcoin chart, not much has happened during the last couple of days. We had a nice pump on Sunday to the upside, but we are almost gonna recover. We almost recovered it already, this volume candle. As you see, we have a bit of it left. I marked it off in the chart. It started here at 26.8k and will probably get recovered pretty soon. And I told you about this line right here at 25.8k. This needs to break in order for us to have the last leg down to the downside in the market making structure. We could go down to 25k, and that is where we potentially will form a double bottom formation, but we could also go down to 22k and also here at 20k, which is a big volume candle area which hasn't been recovered yet. A lot of open orders which hasn't been filled in this zone to the downside, and I do think that we could possibly go here if we get some bearish news the next couple of days and weeks, but we'll see what happens. If we break this, you should hold on to your shorts and ride out to the downside. If we create somewhat of a double bottom formation, and yeah, let's say that Bitcoin moves like this, stops here at 26.2k, works slowly to the upside and closes a 1 hour candle above this high right here at 28.4k, I do want to consider that a double bottom formation. We could have another ride to the upside again, but I don't think so, because the market making structure always works something like this. Well, W bottom. Oops, that was an ugly W bottom. Sorry. Let's start over. W bottom. Something like this. It's not always a clear one, it's a irregular one sometimes, and sometimes it's pretty clear. We have first leg down, first leg up, sorry. First leg down, second leg up, second leg down, and then we top out in an aggressive move to the upside. And then we have an accumulation phase of shorts with a double top formation. Confirmation when we close below it on the 1 hour time frame. We move down in 3 steps all over again, and then we create a double bottom, and the process starts over again. That's the market maker structure, and as I told you, we had a double top here in mid-April. We had our first leg down, first retrace, second leg down, We are currently in our second retrace, I would say, because we haven't broken this line as I told you. And when we do that close here below this one on the 1 hour time frame, we are in a third and final leg down, and that will bottom out in a W bottom formation, and that is where you want to close off your shorts if you are in any, and start building your longs in this area of accumulation, because when we move out of here, we move aggressively. Same thing to the downside. You saw the W bottom. Look at this big daily volume candle after the double top formation. If we look on the 1 hour time frame, we can see it even clearer. If we zoom out a bit, we can see on the 1 hour time frame, when we created this double top formation, it took a couple of hours and days, and then big volume candle to downside, dropping, confirming this double top scenario, and then straight down almost. Look at the angle on this from the top right here, straight down in a matter of hours, which is pretty interesting. So when we create these accumulation phases, we move aggressively from them. Looking at the news this week, not much going on. We had the CPI numbers come out from Germany, which will have an effect on the euro, which could have a possible effect on the euro and the dollar strength. We have the unemployment claims for US tomorrow, and non-farm employment change on Friday. Other than that, not a big news week this week. Next week is even slower, not much going on at all. The week after that, on June 11th from June 16th, it starts off on Tuesday with CPI numbers from the US, and immediately the day after, federal funds rate on June 14th. But we're going to talk about that in a while when we get closer to that date. Looking at the liquidation map, we can see a lot of short liquidation clusters, or sorry, long liquidation clusters. People having gone long, which means there's a lot of money for the market maker to grab to liquidate these people going long. And I think there is more liquidation clusters to the downside than to the upside, which even adds confidence to the fact that we're gonna go to the downside. Not financial advice, this is just for educational and entertainment purposes only, but more money is to grab to the downside for the market maker than to the upside, and a lot of on-field volume candles to the downside as well, which means there's a lot of open orders which hasn't been filled yet by the market maker. So that adds to the fact that we might possibly move to the downside, but it's not financial advice. You do whatever you want to do. Let's take a look at the AVAX. Looking at the AVAX, then we can see that we moved aggressively from our local top here at $21. We are now currently at 14. We moved aggressively to the downside, but if you remember, or if you don't, you can see that we moved aggressively to the upside, trapping a lot of retail traders to buy, to go long in this area. You see, they almost recovered half of it already. We have another half left here at $12.69, which could get recovered pretty soon. So if we look even further to the downside, we have some volume candles which has been recovered for a while here at $10 or at 9.74. Not interesting at the moment since we are day traders, but if you are accumulating AVAX and think it's a great project, you could see prices going there if Bitcoin drops aggressively to the downside. But if you watch the Bitcoin section of this video, you can see that we are expecting another drop to the downside, and I do think this volume candle will get recovered at $12.71 at least, and then we'll probably have a W bottom formation in this range, and we'll move aggressive from there when we finish. So a 1 hour candle close above a high like this, a solid close above, for example, a VIC in this area, is your signal possibly to go long. Not financial advice, but that's how I will look at it. AVAX is a great project, and I do think if you can get some orders in the $12 area, some longs, and write out up to $20, you will get a great profit on that trade. Not financial advice. You do whatever you want to do. So please like and subscribe if you enjoy this video. We talk to each other in a couple of days. This is Big Boss brother number 2. Day trader Big Boss. See you soon. Big Boss out.